Hey, what's up, my friend? So, in today's episode, right, we will be discussing how you can learn from your mistakes and shortcut your trading success. Because here's the thing in trading, right, it is not as black and white as it might appear to be, right? For example, you can make money, right, on poor trading decisions, and you can lose money on right trading decisions. So now comes the question to, what is right and what is wrong? Because clearly, right, you can make money doing the wrong things, and you can lose money doing the right things. So now how do I know what's right and wrong? Okay, so this is why it's important, right, to understand, right, what are trading mistakes, right, that you really want to avoid making, right, because in the grand scheme of things, right, these are the ones that are actually holding you back, although they might not be too prominent, right, in the short term. Okay, so to do this, right, first and foremost, you must have a trading journal. I know most of you are thinking, Rayner, trading journal, that's the boring stuff. I want the strategies, I want the tactics, I want the patterns. Here's the thing, right? Many traders out there, they just focus on the strategies, patterns, tactics, right? But the minority, right, the traders who are consistently profitable, they are looking in the other direction. Their trading journal, how can they improve on their trading results? So you must have a trading journal if you are serious in this business. You must have a way to record down your performance. Okay, and the trading journal will help you with it. So in the trading journal, if you are clueless about it, right, here are a few basic things that you need to have it down, right? Number one, the type of trading setup that you're taking. Are you trading a breakout? Are you trading a counter trend trade, a trend trading trade, whatever? You need to filter down and write down what is the type of trading setup that your trade, right? That you just take what is the category of the setup. Number two, you need to, write down the stuff like, your entries, your exits, your stop loss, right? These are all the basic matrix that you should have. Then number three, right? You also want to put down, right, your overall profit or loss on the trade. And I like to write it down in terms of R. So R, you can just simply treat it as your risk to reward on the trade. So for example, if you risk $5 and you make $20, that's a risk to reward of 1 to 4. Alright, so in terms of your R multiple column, you write down 4R. If you hit a stop loss, right, that is a loss of 1R. Simple stuff, okay? So that's pretty much, right, what your trading journal should entail at a bare minimum. And if you want to take things forward, right, you can screenshot your charts as well when you took on the trade, right? Your exits, when you exit the trade, screenshot those charts. Those are also very important stuff. Okay, so this is the rough idea to what your trading journal should entail. So once you have it, right, then what now? Okay, so once you have your trading journal, and I hope, right, you are consistently recording down your trades, 50, 100, 200, whenever you put on a trade, put it down in your trading journal. And once you have a sample size of trades, right, this is where the magic begins. And trust me, when you are at this point, right, you are already ahead of 90% of traders out there, because they don't even record down their trades. They don't even know what a trading journal is. Okay, so once you have let's say a sample size of 100 trades, when you trade 100 breakout trades, you have 100 lines in your trading journal. This is where things happen, right? So the first thing you want to do, right, in your trading journal is to identify, right, where did your largest loser come from? Because if you think about this, right, in trading, your trade can only end up in one of few ways. Number one, it's a large winner. Number two is a small winner. Number three is break even. Number four is a small loss. And number five is a big loss. So the first thing that we want to tackle is your large losses. Because if you can contain your large losses, you will be that much closer to becoming a profitable trader. So the first thing that we're going to do when we analyze the journal is ask yourself where, identify, right, if you have any large losses which are more than 1R. And then what you want to do is ask yourself, how did it happen, right? Why it happened, and how we can avoid it. Okay, so let's say you look at your trading journal and you realize that there are certain trades, you have a loss of 4R, 5R, meaning, 4 times what you plan to risk. Then ask yourself, why did this happen? Is it because you're trading in a market, let's say a stock market that has low liquid stocks, and by the time you exit your trade, right, it has slipped, right, badly against you, suffering bad slippage? If that's the case, then what you can do is, avoid trading this type of low liquid stocks. Or maybe let's say you had a large loss because you didn't follow your rules. You feel uncomfortable, taking the losses, so that's why you hold on to it longer, and that's how your loss snowball into a large loss. If that's the case, then what you want to do is to take preventive measures, right, so that it doesn't happen again. And one way to do it, right, is make sure that the pain of breaking your rules is greater than the pain of following your trading plan. So for example, let's say if you don't follow your rules, right, you make a promise to yourself that you donate $1,000 to your favorite charity. So clearly, right, the pain of maybe donating to charity is greater than the pain of taking the loss. Something along those lines. Okay, basically doing something, right, where the pain of doing it is greater than taking that loss that you had. So I'm just giving charity as an example, right? Maybe you're a very charitable person, that doesn't work for you. Then maybe run 10 kilometers around the park, something like that, right? Make sure that the pain of breaking your rules is greater, right, than following the rules itself. Okay, so this is an example, right, to how you can actually identify your largest losses, right, and prevent it from happening again. The second thing you want to do is to identify patterns, right, that leads to your losses, right, and avoid it, right? So for example, let's say you trade breakouts, you have 100 breakout trades that you recorded, and you find that there are certain patterns, right, that whenever you trade breakout, those breakout trades tend to fail. Maybe because you realize that you were trading against the higher time frame trend. That's why those breakout trades has a low probability of working out. If that's the case, right, then you want to avoid trading breakouts, right, when it's against the higher time frame trend. Again, all this you will only know, right, when you review through your journal, right, when you record it down, right, and look through your charts, right, and see what are the patterns, right, that occurred that lead to your losses. So all this only you can answer. I'm just giving you examples, right, of what you might find. Okay, and finally, the last question you want to ask yourself is to identify your small winners. Okay, and why it occurred. So there's nothing wrong with small winners, right? For example, if you follow your plan, right, and it's a small winner, that's fine. Maybe you're using a trailing stop loss technique, market retrace and hit your trailing stop loss, you end up with a small winner or break-even trade, that's fine. Where it's a problem, right, is if you were actually having a small winner because of breaking your rules, because your emotions came into play, right, that caused you to deviate your rules, and that's how you end up with a small winner. Okay, so this is where, again, right, you want to, ask yourself, why did you break the rules, right? Why did you not follow it? And again, to do something, right, to make sure that, the pain of not following your rules, right, is greater than following your rules yourself, right? So these are the few things, right, that you want to do to identify your mistakes, right, and shortcut your trading success. So let's do a quick recap, right? So first thing you want to do is to set up your trading journal. This is the only way, right, to get started in the right direction. Second thing you want to do is to identify your largest losses out there and ask yourself, why it happened and how you can prevent it. Third thing is to identify patterns, right, that lead to your losers, right? What are some common patterns that usually lead to your losers, right, and avoid it. And finally, the last thing is identify your small winners and ask yourself, why did it occur? Is it because you're following your rules, or is it because your emotions came into play? And then fix that issue as well. So with that said, I have come to the end of today's episode, and I will talk to you soon.